Thank you. Good afternoon. I'm Graham Mannion, Managing Director and Founder of DCisions, and this is Maya Kazalti, Director of Products and Analytics. We're here to bring the simple concept of comparison to retail investing. In March, the Financial Times called our website revolutionary. There's an amazing paradox in wealth management. Most people agree asset allocation is the most important driver of performance. In other words, how we allocate our portfolios across the basic building blocks of equities, bonds, cash, and so on. But no one has access to data on real portfolios to benchmark risk and asset allocation. For the first time, we are providing fact-driven benchmarks for portfolio construction. We're sharing data on 1.5 million real portfolios so consumers can see what's really going on. Think of it like a new Dow Jones index at portfolio level, giving transparency to asset allocation, risk, and return. Let's take a look at our consumer interface, InvestorB. Everything you see here can be white labeled for the financial institutions who share data with us. Maya's looking at opening an investment account to build equity as a down payment for a property. She has an advisor, but she wants to do her own homework. First, Maya wants to get a handle on risk, so she selects the Compare Risk tool. She plans to start off with a lump sum of £10,000. Previously, when considering the concept of investment risk, Maya has had to rely on the opinion of whoever is selling to her. She chooses the medium-high risk level, and with one click, Maya obtains fact-driven benchmarks for portfolio risk and return. Our database calculates the return profile on 1.5 million real portfolios advised by more than 1,000 firms and categorizes them based on volatility. In other words, how bumpy the ride has been for the retail investors holding those portfolios. And then it shares the simple facts. It's her GPS for portfolio construction. Now Maya's ready to look at investments in her chosen risk level, so she selects the Compare Investments tool. She starts by selecting medium-high risk. The site shows 5 benchmarks for fair return after fees across 5 risk levels. This is all based on the concept of an initial £100 investment 3 years ago. The benchmarks are derived by looking at the average return for every individual portfolio in our database within the relevant risk level. Now, against each benchmark, we provide simple ratings for multi-asset funds. This is one of the hottest categories of investment product and one of the fastest growing, and it represents portfolios in a simple single unit, a real profit priority for many investment platforms. We analyze the historic risk and return of each of these individual products and use that information to categorize them into the relevant risk level and then look at the net return to see if they've added value after fees. She can scroll through all the funds in each risk category to see the value they deliver. Maya is able to understand the risk each fund is running and whether a fund is adding value for the risk taken and the fees paid. It's only through the power of comparison against a database of real portfolios that consumers can see whether these products have delivered value for money. Maya recognizes the Henderson brand, so she decides to drill down on Global Strategic Capital. She clicks on the tile to reveal a simple summary inspired by food labeling. The rating shows the fund outperformed the fair return benchmark by £46 after fees. It was at the higher end of risk within the category and in the middle of the fee range. Maya wants more details, so she clicks on See Full Description. She enters an initial investment of £10,000, and up comes the black line showing the performance of the fund. The all-important context is given by the orange line, the benchmark. Just to recap, that's the average return across the hundreds of thousands of portfolios in our database that are delivering the same level of risk as the product that's being analyzed. While the performance overall has been good, Maya's not sure it's right for her at this stage, so she decides to add it to the watch list in her My Account section. Now, Maya's read in countless articles that index tracking is a sensible strategy for most investors, so she decides to take a look at the medium-high risk benchmark. Now, with just a few clicks, by linking InvestorB to a transaction platform, it would be possible for her to execute the strategy for an all-in cost, for example, of just 1%. Back to the Financial Times article I mentioned earlier. The reason the FT said revolutionary was because to date, consumers have been forced to make asset allocation decisions. As our database proves, when you're forced to do that, you have a 1 in 2 chance of getting less than a fair result for the risk you're running. It's not previously been possible to define or access average performance. For the first time, DCisions has created a universal reference point for portfolio risk and return. Investors don't want to feel alone. Our database gives them the incredibly simple and powerful benefit of comparison with other real investors. Our database defines asset allocation and average returns at different levels of risk. DCisions is GPS for portfolio construction. Now, we're here in the US to start a quiet revolution. Our UK data partner program is gaining traction, and we want to build partnerships over here. If you're from an investment platform, please come and talk to us. Learn how you can use DCisions to harness your transaction data in order to deliver the simple power of comparison, to build trust, deliver more efficient solutions, and delight your clients. Thank you.